Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Invesco QQQ Trust, which basically tracks the tech sector, ticker symbol QQQ. As I zoom in here, you'll see that I left my lines on the chart from last week's report, where last Friday I drew that diagonal line down, saying we would most likely pull back to test that support level, which was the moving average. That's exactly what happened. Then what? We bounced. We bounced off of a key role reversal here. I talk about this each and every week, where former resistance here and here, once it's broken, turns to support. And this will remain support until it's broken on the downside. Then it flips back and goes to resistance. So what does that mean for next week? Well, you take a look down at the bottom of the chart. I'm going not in sequence more or less, but down at the bottom, you can see that the CCI, which is down here, that's the Commodity Channel Index, is showing a lower high on this indicator after a higher price high. Now, this higher price high happens again at another role reversal right here. See this? Former support, broken, turns to resistance. It happens on the way up, and it happens on the way down. So that negative divergence is something I pay very close attention to. And while we have an oh so slight higher volume today, I do think that next week, on Monday especially, we might see just a tad higher. I'm just going to do this little hash mark right there. And then I think over a 2-week period, possibly sooner, we're going to pull right back to this moving average and at this role reversal down here. So I'm going to draw this out for you just like that. And again, go back and listen to all of my recordings over the years, and you'll see that that horizontal line is so much more important than trend lines, fan lines, and even moving averages. These are the areas where supply and demand switch back and forth. Buyers eventually sell, sellers eventually buy, and we have this transition. It's not a phenomenon by any stretch, but it's a common occurrence. So that is the cues. My downside target, let me just establish that. First, very short upside target of 317.70, and then over the longer period of time, 297.72, 297.72. Let's hop right to IWM, where I'm going to show you again some more role reversal lines. Last week we pulled back early in the week, but we didn't get all the way down to that moving average. Not at all. Instead we went up and filled this gap, which is something that happens quite often. This gap filled, and we are very close for filling this gap. Now I'm going to redraw this. I'm still going to keep the downside targets, but I'm going to clean the chart up for you. This very small gap right there is right where we are. So with the drop in volume, a little bit different than what we saw in the Qs, we have a drop in volume on IWM with a hanging man candle back to back. There's two hanging man candles on lower volume, negative divergence on the CCI and a negative divergence on the stochastics. So next week, as we go into the first week of August, I do believe that we're going to pull right back and head right to that moving average. So downside target of 179.59, 179.59. As I just take one step back, I just want to show you something here. Again, looking at these horizontal lines that we call role reversal. Way back when, I said 210 was the level to watch out for. If you remember at the beginning of the year, I said once that level breaks, we're going to get out of any long positions, and we're going to reverse our positions for the option trades into a negative delta or bearish condition, and we did that. We've been making money ever since. Guess what happened? Broke support, and then it turned into resistance. Well, guess what? That same line, that horizontal line, was drawn down here around 187 to 190. If you remember, again, go back to the recordings and listen. I said if we break out below that low, support will turn into resistance. And that's exactly what happened. We are at a resistance point right here on dropping volume. I think we're going to go lower. But what does that mean? Down the road, it means that we have a new support level established right at these lows down here. You see this? That is more or less a channel that is almost equal to what we saw up here. You see this? When channels are broken, like we saw here, the width of the channel tends to duplicate. If we break out below this low, what could we see? Yeah, lower prices and a new trading channel. Again, still in a down market. So be very careful. I'm going to get to show you some more evidence at the end of this presentation here so we can show you what exactly I'm looking at in the world of economics. Okay, so now let's go to the diamonds. It's going to be pretty much the same story. We came close to hitting my target last week and then did a reversal right here. We're at a key resistance up here. Look at the volume, slightly higher. So because of the volume, I think we're going to go just a tad higher and then pull right back like I talked about with the Qs. So again, just a little bit higher. Upside target on that one is going to be 331.16 and then right back to this moving average. Look what I'm doing. I'm drawing to the right as I'm looking at the angles at the left. So you have this angle here is duplicating more or less what we saw back here. So again, upside target, to reiterate, is 331.16, and then a longer term target towards the middle of August is going to be 318.10. Again, negative divergence on the CCI, negative divergence on the stochastics, wide divergence from the price in the moving average. It doesn't like to stay that far above the moving average before pulling back, especially when we are at a resistance point like I mentioned earlier. Right now, there are also some other things you want to pay very close attention to. There's an open gap below the market right there. That will ultimately be the target once this roll reversal is broken. Again, I'm doing this by design. The redundancy is intentional. This former resistance on the way up was broken, turned to support. Once it breaks out below that support level here, it'll most likely drop to the next gap fill support level. So you can see how the sequence works in the trading activity. They call this up legs and down legs. All right, let's look at the spiders. Ticker symbol SPY. We're on a roll here. We had a gap fill this week. See this gap? Remember, I talk about that all the time. That is 80% of the time gaps fill. 80%. What happens after they fill? 80% of the time it reverses. That's exactly what happened last week. You see, that's why we originally called for a down market. Came within pennies of hitting that downside target right there on the spiders. Bounced. And now we are at another resistance point. This is, again, very similar to what we see in the Qs. If we have a higher volume on the way up, you could expect to go up just a little bit more until we see a volume drop, which I think we will later in the week. Then guess what? Right back down. I'm not going as far down to that moving average because this gap fill has reversed its role from resistance to slight support. All right, so I'm going to keep that in place. I'm going to keep these in place so you have a good eyeball on what to expect. This is still an open gap down here. And if you follow along each and every week and you're managing risk, this should be a very fun time for all of you. And I see from the comments that a lot of you are following me in the option trades as well. Now, with the spiders comes the VIX because, why? For the most part, the VIX is inversely related. We called the original pivot point, talked about that last week. Now we have a long stretch of red. See this? Now, interestingly enough, I've said it before, I'll say it again, there is a very minor gap above the market right there on the VIX. There is gap back here. There were gaps prior to this. Here's a gap all the way back here. When gaps are open on the VIX, I often give 100% guarantee that the gap will fill. Why? Because the VIX is an oscillator. It's not a trending stock. So you give it enough time, those gaps will fill. And that's exactly what happened. We gapped down today. There's a minor gap. So I think next week early on, that gap will start to fill. And then we'll begin to see a possible pivot on the VIX to the higher level. So I'm going to leave this target in place right there. The upside target on the VIX is 28.53. It's currently trading 21.33. Opportunities there for option traders in the VIX and even the SQQQ, which is like the VIX. It's inversely related to the triple Qs though. But I like the SQQQ. We have a position in that. We're making money on that. Our option traders are making money on that. So these are tradable instruments that you can get in and out of. And you can see that as long as you're using the charts, you could establish price targets for yourself as well. Now let's get to some of the meat. Some of you heard the news or lack of news that, oh, guess what? We're not in a recession. Well, let me just play this for you because you really have to get the full effect. I'm not going to play the whole thing, but hold on.
If things are going so great, though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. it's something else. How is that not redefining recession?
Because that's not the definition.
Okay, folks, that is the definition. I hate to break the bad news to the White House, but a recession is 2 consecutive quarters of a shrinking GDP. Called that 4 months ago. If you remember, go back and listen to the recordings. I said that in August and into September, we're going to get a lot more talk about recession, but it's getting much worse. And this really ruffles my feathers a bit, so excuse me if I get a little heated on this discussion right here, this slide. All right, first of all, the Fed is telling us that they are tightening. Well, in fact, this report, which comes from the Fed, go to fred.gov, you'll be able to pull this report up. Wednesday, July 13th, it's showing with great evidence that they are moving money out of the Treasury here, Treasury securities, and they are moving money into, guess what? Mortgage-backed securities. The net is a positive cash influx of movement into the mortgage-backed securities. And what does that mean? Folks, this is 2008 times 10. So if you still have that bullish idea, I'm not saying you can't make money individual stocks on the way up in short intervals, but the longer term picture is looking extremely bearish. And when we have government officials outright lying to us and even deceiving us, you can see this is what they print, which is opposite of what they say. This disturbs me. Now let's go and look at some of the other things I said. Make sure that you're following the numbers and you dig and hunt for the news. Well, guess what? Well, everyone thinks that the job market is great. This is an actual report from the Bureau of Labor Statistics. Initial jobless claims have just hit an 8-month high. Look at this trend, folks. We do a lot of trend analysis. Wouldn't you say that's an uptrend? And there is no sign of that stopping. There are no pivot points here. There's no volume to measure that. This is just an upward trend that is not stopping. What does that lead us into eventually if the Fed does not increase rates? It looks like they're not going to. They're going to hold back at neutral position right now. Well, if they don't get ahead of the inflation curve and we keep seeing the job market get worse, then we are on track for stagflation. Many of you don't remember that. I do. I lived through it in the 70s. Stagflation is nothing to mess around with. It's inflation combined in a recession, what makes it much worse. And guess what? Connect the dots. Here we go. We're going to start having some military talk right now. Remember I said, don't look at Ukraine. Look at what's happening in China. What's happening in China? Look at the date. This is July 26th. The Chinese are now launching drones. For those that are in the Air Force, you know what that plane is right there. It's an unmanned aircraft that's used to direct missiles. And this is a precision-guided instrument that is known as a drone. And this is what's happening this week. Connect the dots again. What happens the day after that? U.S. carrier groups start heading towards Taiwan. Remember, I showed you a picture of the U.S. Navy and how they were documenting the satellite tracking of, not going to tell you the exact spots, believe me, not going to tell you exactly where they are. But this is what happened the very day after we got that first news report. What happens the day after that? Carrier movement. It's hard to see. You might have to expand your screen on this one. Right here, the USS Ronald Reagan is on the move. It's out of Guam and it's now in the South China Sea. This is what's sparking a lot of attention right now. In addition to that, CVN 72 right there, which is the Abraham Lincoln, is moving out of Pearl Harbor and is starting to move over to the South China Sea. Look at the colors so you can track with the darker the color, the more recent the location of that, right? There's the index down here. And we have 4 carrier groups that are ready to roll. That's a lot of military hardware, folks. I spent time on the Nimitz. Nimitz, one carrier group is nothing to mess around with. We got 4 on the roll right now. And keep an eye on that. Again, connect the dots. I said, make sure you keep an eye on China. What else is happening? This just happened yesterday. China holds snap military drills in response to U.S. carrier entering South China Sea. This is the USS Ronald Reagan. And now the tensions are increasing. Whether or not we're going to see any kind of a conflict, I actually doubt that. I think this is a show of force to try to deter China from entering into Taiwan. I don't think that's going to work. I think they will take action eventually. That's my opinion, by the way. Nothing to support that militarily because they will not disclose that. But now we go. What happened yesterday again, right after this exercise? Well, the Chinese are now starting to fly their drones and starting to buzz the military ships. So this is all heating up. Now, one other thing that disturbs me, again, it's a big lie that we hear about. I hate to sound so negative and dark, but we make money on the way down in the market. You just have to be prepared. One of the reasons I get heated up, folks, is because there are so many people listening to the television and, oh, the bear market is over. Oh, it's time to buy. And oh, here's the top 10 stocks that Kramer says to buy this week, right? Well, look, again, listen to what they're saying and watch what they're doing. This is a strategic mistake, by the way. This is the U.S. emergency petroleum inventories. 2 years ago, we were at a high, right here, 2 years ago. We're now at a low. We also have evidence and a lot of stories coming out that we're selling our oil to China. Why does that disturb me? Why are we selling emergency inventory to the very country that's trying to destroy it? Doesn't make sense. And as a veteran, this really upsets me. But go look it up yourself, hunt for the news, and you're going to see that there's a lot more dots to be connected, again, especially economically. Look what's happening. I'm going to let that sink in for a little bit so you can read some of that. Long lines are back at U.S. food banks as inflation hits high. Oh, we don't have recession. Oh, we don't have a problem with the economy. Job market is good. No, it's not. This is the modern day equivalent to bread lines in the Great Depression. We're not talking about just an extra 100 people showing up at the end of a food bank line. We're talking about hundreds of thousands and millions across the country who are showing up because they can't put food on the table for their family. They can't stretch the dollars far enough. This is a fact. This is absolute fact. Do your own research. Now, as far as stagflation, why do I love gold and silver? Here's why. If you look, this is still in an upward trend. Let me just move this over just a little bit so you can see the full chart right here. This is still an upward trend. Gold is still setting higher highs and still tracking higher lows. I do believe that we're very close to setting a new record high in gold. I like silver as well. I've been accumulating silver for the past 14 years in a dollar cost averaging strategy. It's cheap. It gets cheaper. The cheaper it gets, the more I buy because I'm hedging myself and my family to make sure that we're going to be protected through any kind of economic storm. Now let's look at another chart right here. This is very interesting. This is a cycle chart. Let this one hit you now. Look at the similarities. We had a 12-year, 5-month run right up until 2000, 1999, 2000 right here, where we had an 8-year, almost 9-year sell-off. This is called the lost decade here, folks, because remember, we hit that low at the end of 2009, but we didn't get up to these highs until into 2013, 2014. So again, this was the lost decade. Where are we right now? We're just at the very beginning stages of what could be this. Now, again, if you're following my market reports, everything is documented. I archive everything. I set the record. I ask people to hold me accountable to that record. I have been forecasting that we're going to see the 2020 lows across the board in all markets, not just in the S&P, the Dow, the spiders, and in the Qs. All markets, I think we're going to be pressing the 2020 lows. And even then would be a conservative estimate because we could still have another 8 years of pressure on the market as it continues to struggle. Remember, that role reversal, it applies to any time frame. These lows are a support level right here. If this support level is broken, it could take us years to get back up over that former support because that turns to resistance. One more thing. If you have not had a chance to read The Fourth Turning, I would go right on Amazon right now. I get no benefit whatsoever or pay for recommending this book. Strauss and Howe are the authors. Read this book. This is one of the most significant publications of cycles that I've ever come across. This basically talks about the history of cycles over a 500-year period. Economically, politically, you name it, they analyze it. According to this theory right here in this cycle, we are about to turn into what could be an economic earthquake for the U.S. Now, initially, that might sound scary, but the good news is when we come out of the other side of that storm, it's going to be an amazing run. So get this book, Get a highlighter, highlight it, reread it, share the notes, share the data, and make sure you talk to people about it, because I know there's a lot of folks that are not preparing. Again, it's very easy to go buy and hold, but what happens when you buy and hold and it goes down? What do? Buy more and keep buying more until you lose all your money? Right? That doesn't sound like a strategy to me. It sounds like hope, and hope is not a strategy. Prepare and you will benefit. Remember, we make money faster on the way down. You have to manage risk. You have to learn how to read the charts. You might have to learn how to trade some basic option strategies for protection and such, but stick with this channel and I'm going to help you along the way. One other thing, again, thank you so much. We are now consistently hitting over 8,000 viewers on a regular basis. We're still trying to push that over 10,000. So please continue to like and share the video. Of course, keep your comments and questions coming. I love that. I spend a lot of time, you may have noticed. I come under the Market Rebellion sign-on, but every now and then I come in through my other YouTube channel and answer questions that way. But I just want everyone to know that is me answering those questions. Even though it says Market Rebellion, that is me answering the questions. So thank you for that. It helps us get on the menu, and it gets us more likes and looks, because as people search, it gets thrown on the menu, people click on it, and then all of a sudden they're learning about charts. Again, all thanks to you. So have a great weekend, folks. Stay positive. Although that might sound like a dark cloud, be very positive. It's all good. It's all good. Have your plan in place and be ready. Put your seatbelt on and stay tuned, because we're going to be rocking and rolling in the months ahead. Take care. Bye-bye.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.